Hi, this is Mr. Guy, and I'd like to talk to you about goals today. There are short-term goals and long-term goals. And on the other video, I mentioned goals, and I just wanted to be clear on what your short-term and long-term goals are. So basically what I've got here is short-term goals would be normally things within a year. So if you need to save for vacation, a car, any type of expense, this could be IRS tax expense, this could be furniture. You might have short-term goals where you need to save money, and one of the major goals is to always have 3 months of expenses of, say you lost your job and you need to basically have 3 months of your total expenses in the bank so you can pay that if you didn't have a job. But these are short-term, so it's less than a year. They could be for any different option, but you don't do long-term investments. You normally don't put things in the stock market to do this type of investing. You actually save. So you're just going to put money away from your paycheck. You're going to put it into a savings account. You might put it into a short-term CD, but it normally just goes into your savings account. You keep it and build it up until you've got what you actually need. So if you save up for a vacation, banks used to have things called vacation clubs where they directly took money out of your checking account every month or every week to save for a savings account. You might have a car, you want to save money for a car, so you take part of your paycheck, 20% or 10% of your paycheck, and put it in the savings account for a car. And then it could be, fixing the car, it could be fixing the house, it could be anything types like that. So short-term goals are normally things that you need to have for a year. You put it in a savings account, and that's it. Long-term goals are, many, varied, and this is where you actually do investing. Short-term goals I normally put as my savings, long-term is my investing. Two big ones are college and retirement. So if you have a child that's just been born, you have 18 years to save for college. College is very expensive. You're looking at basically just tuition at ASU is $10,000. Then you're looking at meal plans, and you're looking at dorms and books and everything else. You're looking at in-state, you're looking at $20,000. If you're out of state, obviously it's more. So they actually have the cost of attendance at ASU is $27,000. You multiply that by 4, maybe 5. You're on the 5-year plan. That's a lot of money. A lot of people say you need to save about $160,000, $180,000, $200,000 for college. Retirement, you want a retirement that you can live on, and you want to save money. So when you're 65 or 70, you want to take this money and have it, and figure out that you might have $3,000 a month or $5,000 a month to live on. So you have to determine what you want to live on when you retire, how much money you can do, not counting Social Security, because you got to figure Social Security in there. There's going to be some of it. You might have a pension, but you want to save enough so you can have a comfortable, lifestyle. So normally, if people are saving and putting money in 10% a month, and they're saving 10% of their income, and they're putting money in a savings account, and then once it builds up, you can put it in investments. Normally, retirement in college, you put in basically a mutual fund, you put into stocks, you put in something where the return is higher. Up here in your savings, there's very little risk, and there's also very little reward. You're looking at 1%, less than 1%. Down here, you want to make 10, 15, 20% if possible. You have a higher risk, but you also have more years to make it up. College is 18, retirement, you might be 20 years old, and you retire when you're 65. So that's 45 years to basically save and invest. So when I look at long-term goals, I'm looking at over a year, and I'm looking at things that you want to do. Now you can also invest for a house, and you can put money away for a house and say, okay, in 10 years I want to have so much money for a house. You can put money away and invest it and put it away for marriage, for kids, whatever you need. Long term, normally to me, is where you're investing. You're in the stock market, mutual funds. You have a higher rate of return. There is more risk, and they're for big ticket items, and they're longer terms. One of the things that I always want to tell people is if you are going to college next year, or you are retiring next year, or you are in retirement, you shouldn't be in the stock market. The stock market is risky. You don't have the years to make it up. You should be in stocks. Get out of stocks and be in bonds or in a savings account or something safe. My parents lost a couple $100,000 in the last downturn, and they couldn't afford that. My father-in-law lost the same amount of money, And it's like you shouldn't be in the stock market because it's very risky. You should be in savings or in bonds. So hopefully this helps with short-term goals and long-term goals. There's many and varied. Each person is different. Each person has their own needs. But if you're saving, that is for short-term goals. If you're investing, that's normally for long-term financial goals. So hopefully that helps. Savings is risk averse, and investing you are able to take some risk. So thanks a lot. If you have any questions, post after the video or in class. Bye-bye.